GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to another edition of this weekly webinar where we go through the charts of some of the biggest currencies, commodities and indices. This is mostly about technical analysis. We will touch on the big news, and if you did have some questions, please drop a comment on the video. Always very much pleased to respond to those, and obviously if you do get some benefit from this video, make sure to give us a like. Now you can see on the platform in front of us here, we've got the Bitcoin chart. Okay, so BTCUSD. Let me just make this full screen. Just mention this particular chart today because it is the Bitcoin halving today. We're on May 12th, and so in case you weren't aware, today is the day that Bitcoin miners now get only half the amount of tokens they previously did for the mining that they do. So obviously, if you'd like, the profitability of mining Bitcoins just got cut in half. So that is obviously quite a big deal for those miners especially, but also potentially has big implications for the price. I just wanted to highlight that we did have a big sell-off on Sunday night. You can see the price has gapped heavily down here. We were close to the 10,000 level. We had basically just tested it, and then coming into this event we saw that sudden risk-off move in Bitcoin. But the point being here is that we're actually still within this upward sloping channel. Now the top of the channel a bit messy at the start, but you can see the latter half of it actually, if I copy this trend line across, you can see that actually it's perfectly parallel in terms of these last two peaks. So there was a couple of technical reasons there why Bitcoin might have wanted to sell off from this peak. You can see we had the bearish divergence in the RSI from a very strong overbought position over here, the bearish divergence, and then that parallel channel top. So okay, and the 10,000 level. So it's three very good reasons why the price sold off. But the important thing for the moment, at least, is that we've rejected this upward sloping channel. So we had a little false break below it, a test, a false break with a long leg doji, and we've been creeping back above. Obviously things are a little bit tentative at the moment because no one quite knows what the effect of this halving would actually be. My feeling is that it would make sense for the miners to want to offload their bitcoins ahead of this event. That may have played a role in that March sell-off, and now there's going to be, as we move forward, there's going to be less supply out there of Bitcoin, and if demand holds up, that economic theory tells us should be good for the price. So anyway, trend in place at the moment, but certainly be prepared to turn into a seller. If we take out this recent low and we move below this rising trend line, that would suggest at least a correction, if not a reversal in trend. So let's leave that one for now. I will switch gears to the currency market. Let's start with the euro dollar. So not a lot has changed in the good old euro chart. We are still clinging on to this 108 to 110 range. Some interesting news last week that the German Constitutional Court put in a ruling which went against the ECB's virus, whatever acronym they gave it, money printing program. And so potentially down the line that causes some problems for whether the ECB can actually increase their money printing from current levels. Normally printing more money devalues a currency. It's bad for the currency. So if Germany is potentially looking at kind of somehow blocking Europe here, that would be an upward force on the price. The other way of looking at it is that actually this increases euro breakup risk. So we've got a bit of a fight between some institutions inside Europe, which are basically kind of questioning how the euro is being run by the central bank. and that could ultimately lead to the euro's demise. Doesn't seem that likely, but the risk of it's increased a little bit. So two interesting potential forces on the euro. Even though it's big news, I think you can lean either way on what it actually means for the price. So hence we're still in this 108 to 110 range. We're hugging the bottom of it at the moment. Yesterday we saw some pretty big dollar strength. The euro actually held up relatively well. It was particularly the yen, which you'll see in a minute, but also the pound, which came in for bigger selling than the euro, which is ticking up a little bit as of today. So I think we're still in opportunitiesville for 108 to hold as support and for us to push up to the top of the range again. We're still inside this range, but as has been the case for a while, I've got a slight bearish tilt on this, and I suspect the breakout that we actually eventually see is to the downside. So not much to add here. It's a range-bound market. It's been for a while. I think we're in our kind of opportunity zone around 108. We've obviously tested this several times. The more times we test it, the greater the likelihood of the eventual break. So be wary of that if you are buying down here at these 108s. It's worked a few times now, so markets don't work at the same levels over and over again. Eventually they give way, and if we are to turn down, then naturally I would expect a retest of this 106.50 low, or if we test the top of the range, 110, and if we do hold this level and we're up to 110 again, then it certainly opens up the chance that we break 110. And then potentially we're off to the races. Potentially that's a bottoming in the euro after this big swoon in March, and we're pushing up to much higher prices again. So here is sterling. You can see similar deal. Also came in for a bit of weakness yesterday, but holding up a little bit today. The price action's been somewhat minimal. We are basically in a 122 to 126, a wider 400 pip range than the euro, although we've only tested 122 once, so it's more like 123 if I'm realistic. On the downside here, which is basically where we find ourselves at the moment, obviously 20 pips above. So that again, range bound. If you look at this daily chart, I mean, this is a double top. We had the rally, double top, so all you need for that pattern to complete is just for us to take out these lows. There's not a clear low here. There very rarely is with these double top patterns, so you've got to make a bit of a judgment call. You can see recently we've had one attempted break above the moving average, second attempted break, third at the moment, so maybe third time lucky. If I kind of zoom in a bit to show what I'm talking about, tried to rally up here, rolled over again, so we could be on the cusp again. So it's similar to euro. I'd still be biased towards trying to buy into the top of the range again because we haven't had a breakout, but I'm suspecting that breakout to the downside is coming. Not necessarily all the way down to 115 again. Maybe we just come down to 120 and we find some bids in around that 120 vicinity and then push up again. But it does seem like a slight downward bias here. 3 failed tests to break above the moving average, what looks like a double top here. So let's just pay attention to this 122, 123 zone for potential breakdown. And 120 on the downside would obviously be 200 pips. It would be very nice to claim. And I say 120. There's no particular reason for that level to hold up. So potentially more if you are able to catch a down move, and if it does actually happen, of course, maybe 120 more of a kind of partial profit taking level than a full-on exit level, because again, no clear cut support in there. You had these kind of daily spikes in close down here, but that's more like 118.50 in this kind of area. 120 is just a round number to always watch. All right, let's have a look at the yen, and this to me is the most interesting opportunity we've got at the moment. And I think I said a similar thing last week when I was talking about the fact that we've had this kind of series of kind of failed breakdowns through this 107, and as of last week we finally did push up through 107. So we had the attempted breakdown once, came up to this trend, this downsloping trend line, came back below it, okay, made a bit of downward progress, and then came up for the as I said before, the fifth time sometimes does it. 1, 2, 3, 4, and then fifth was the one, and that was when we've pushed above it. Now, of course, we can roll over again, but it does look like we've done something a bit more material here. We've taken out this previous peak, so obviously that's making higher highs is not characteristic of a downtrend anymore. At least we're in a range bound scenario. To me, it looks like we test 108. I mean, that's not much of a massive call. We're at 107.50 at the moment. That's where this layer of resistance was, and to me it would make sense that we can even get up to 109. It's only 100 pips above, and that would be testing these previous highs up there. And then maybe we're in more of a kind of then we're just in maybe more of a downward sloping channel. Maybe the situation turns into something more like this, where we kind of come somewhere between 108 and 109, maybe a spike above it, and hold generally in this sort of situation. But the fact that we held off oversold territory on our last down leg, and that we're up into overbought territory, tells me the momentum is definitely turning distinctly positive. And so we've got a little minor pullback at the moment. Look out for that, because obviously it's just coming off this previous peak, which was 107.50. It hasn't come down to 107 yet, which is these previous peaks. That would be a better entry point for just a retest of this trend line. But a test of this old peak, if the market is aggressive and is accelerating, then we may already have had our pullback and then setting up for the next leg up. If not, look another 50 pips lower down to 107, down to this rising trend line for a potential revamp point from down there. Okay, let's have a look at the Aussie. Again, interesting double top situation here with the Aussie. We ran into, I've pointed out this low so many times now. This was the low. It worked a treat. It's actually worked twice with the sell, the bounce, and then the sell again. Well, we've only had one day of the second sell-off, but after one day, it's starting to look a bit more like a double top. So again, we need the confirmation of the breakdown through the 64 and through this support hit through here, which is more like whatever that is, 63.80, for the confirmation of the break lower. But it sort of looks like we're topping out here in the Aussie. You can justify things either way, but it does look like we're getting a bit of a new outbreak in some parts of Asia, also in Wuhan, China, and so the Aussie sometimes used as a proxy for that Asia Pacific region, which has been the best in the outbreak, and maybe there's just some chance for a kind of a retracement of that outperformance. If there is a bit of a kind of second wave, if you like, of virus cases, then maybe Australia, something that's been benefiting very much in the current environment, may be set for a small reversal. Here's dollar CAD, also kind of range bound. This is the peak, the interim peak to contend with, but we're still holding through these these lows through here. A tricky market to trade in my view. Last week I think I was talking about 140 as a sort of pivotal level. I still think it is. You can see how the market's sort of pivoting around it. So it's almost one of those volatility plays at the moment. You get far enough away from 140 that the level is just drawing you back in again. At some point we're going to get that break one way or the other. It's just not too clear at the moment which way that is. So opportunities to kind of sell when you're far enough away from 140, buy when you're far enough away on the downside for the time being, until we get that actual breakout. Not much more to say on that though. This is gold. Okay, so what I wanted to do here is basically I've got these same levels that I've had on the chart for ages, which is basically 116.80 on the bottom side, 117.40 on the top side, so $60 range in gold. It's pretty clear cut. But what you can also do, if you're minded to do so, if you follow the chart patterns, or if you like trend lines, what you can also do is turn it into a bit of a triangle. I think it even works through here. and you can basically see that actually the price is following this triangle pattern pretty well. It's actually getting a little bit too far into the end of the triangle for this actually to be a success. You really would have wanted this breakout to follow through to the top side, or this breakdown to follow through on the downside for this triangle to really work. You could maybe pull it down a bit to be a bit more conservative. Maybe even use this peak through here, something like this, and then maybe you've got a bit more room in the triangle left. But I suspect it probably doesn't create any particularly meaningful break, but what you can see is that volatility is compressing, and for me the trend is still higher. So my bias, as I think I said last week, was still for this triangle to break. But if you are looking for trade the range, you know, kind of buying in, selling in near the trend line, buying in near the rising trend line, will probably give you more opportunities than if you're just waiting for those horizontal levels that I had in place before. They're the lower risk, but they're also a bit further away. It's not really fully reflecting the price action, which is actually contracting at the moment. Reasons for an upward bias, well, the trend to me is still up, and then if you look down here at momentum, you can see we did take out this layer of resistance in here to make a higher high, and we're making higher lows, which we are in price as well. But it looks to me like there's been a bit of a kind of shift slightly to the upside in the momentum. We haven't got to an overbought level yet, but it looks like maybe we could be on our way to getting to that. Let's move over to the stock market, and the S&P 500 is the main thing we're watching here. Now, we haven't taken out it's been a kind of drawn out sideways movement for the last couple of weeks, really. So we've what's been interesting actually is that the Nasdaq Composite specifically, is actually higher on the year now. It's higher for 2020, and for the last few days, it's been outperforming the S&P and particularly the Dow, which obviously has more like the industrial stocks rather than the Nasdaq, which tends to have the tech stocks. The tech stocks are all doing pretty good. And that does make sense. They've been doing better for a long time. They're the high growth companies. Other companies are cutting their dividends, so it doesn't make as much sense to hold on to a company for its dividends. The only reason to hold on at the moment is for growth. And actually the pandemic is exacerbating some growth trends like digital banking, e-commerce. These kinds of things are actually happening more in the current situation than they were anyway. So these technology firms, the beneficiaries. It'd be my opinion that if we do get another downdraft in stock markets, then actually those tech names will probably be the biggest fallers. But for the moment, while we're rising, they're the biggest risers. And anyway, you can see at the moment that basically we took out this previous peak, but we haven't made much progress since this move higher here. We dipped below it, we held onto the moving averages, and the trend is still up. So just because we're below the previous peak doesn't mean the trend isn't up. At the moment we're making successively gentle higher highs. And for the moment, I continue to think that probably this market's heading higher. News-wise, there have been a rise in the number of cases. That does add to the risks to the market. There's been a few bizarre indications like negative interest rates being indicated in the United States but via the Fed's funds futures. So a few little things that are potentially negative are rising out there. But for the moment, the trend is higher. I'll be looking for like a more material breakdown of first the trend, which is kind of a gentle upward sloping trend through these previous lows, and of course the moving averages. I'll be looking for this general definition of the trend, the moving averages, and the trend line to start getting seriously bearish. And then obviously once prices do start accelerating to the downside, you don't normally get much of a chance to sell the bounces. Normally it's pretty quick, so you've got to be ready to kind of sell near the lows if you're trading on breakdowns like this. Otherwise, if you think we're about to roll over, obviously we're at higher prices now, now you get a better price for selling, but the trend is still higher, so there's some sort of that's just always the dichotomy of when you choose to time your trades. Right, here's WTI crude, and this is still a bearish market for my money, but we're consolidating around 25 at the moment. It looks like there's a potential for another little push to the top side, maybe test those highs at 30. We're still about a week and a half away from when those crude oil contracts expire, and if you remember last week, it was on that expiry day of WTI crude that we're looking at now that caused the price to go negative. So the way we trade this on the spot charts, you probably won't see those negative prices, but you would certainly see a downdraft in the price, something akin to this kind of price action. But at the moment we're in a pretty clear-cut range. Around 125 is a midpoint. Trend is higher, but just look to turn bearish if we get a breakthrough 24 on the bottom side, and then 27.50 is our resistance, and we've got that big 30 number above us. So that's kind of where we stand. But the overall trend, I would say, is still down. We're in a correction phase here, but that's not to say we've had A, B, C. Potentially we roll over from here, but that's not to say we can't have a 1, 2, 3, 4, 5, and a big push up through 30. Either that could certainly happen before that expiry time, but that's when I will start getting cautious around is next week, before that oil contract expiry. Okay, excellent. Thank you, everyone. Thanks for attending. Thanks for watching. Drop us a comment. Please subscribe to the channel if you're enjoying these videos, and you won't miss the next one when we release it. Thank you, everyone. Good luck trading.